Hello and welcome to Simplicity in Stocks. In the fast paced investing world, very few metrics ignite as much debate as the P/E ratio, the price to earnings ratio. The P ratio is the stock price divided by the company's earnings per share. A high P/E ratio can polarize investors. Some see it as an overpriced time bomb ready to explode, while others see a rocket poised to lift off. These are stocks that are trading at 40, 50, or even 100 times earnings. Think of stratospheric rise of Trent, Amazon's early doubters, or Nvidia's AI fueled rise. These are all good examples of high PE stocks. In today's market where AI, clean energy dominate the headlines, sky high valuations often hinge on tomorrow's promise, not today's profits. In this video, we will dive into 5 stocks that are commanding eye-popping P/E ratios. We will unpack the stories behind the numbers. Are these companies pioneering the future, or are investors paying a premium for fairy tales? Now do keep in mind that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that said, here are the stocks with very high P/E ratios in the Indian market. Zomato. First on the list is Zomato, a tech platform connecting customers, restaurants, and delivery partners. Zomato's business includes food delivery, where quick commerce through Blinkit, Hyperpure, a B2B service supplying restaurants with ingredients, and going out services, which include dining out and ticketing. Zomato has always been the poster child for the high PE debate. At the time of recording, the stock was quoting at a PE of 336. The stock had a bumper listing of around 125. Thereafter, things quickly went south. The price started to tank as the revenues grew but the losses increased. It was a loss-making entity until the second quarter of FY24. Around this time, the company decided to acquire Blinkit, which itself was a cash-burning business. The acquisition was first looked at unfavorably by the markets, but soon it turned out to be the jewel of the crown. The revenue started to grow at faster rates. The losses started to shrink, giving investors hope for bumper profits. The stock quickly started rising and reached a high of 303 rupees in December 2024. This is how the stock price has performed since its IPO. Recently, the stock price has come off its highs due to disappointing results. Sales grew 64% year on year and 12% sequentially, but its operating profit declined 28% sequentially. This decline was influenced by strategic decisions around expansion and competition. The main factor was the acceleration of new store additions for Blinkit. This required significant upfront investments in network, housing, and marketing. These investments generally lead to reduced profitability as newer stores have lower utilization compared to the mature stores. Competition also drove up marketing costs and led to slight declines in delivery charges. Overall, investments in Blinkit are expected to increase, which will increase losses in the next 1 or 2 quarters. Zomato's high P/E ratio underscores the sky-high growth expectations that investors have, but mounting Blinkit investments and margin pressure from competition can test the sustainability of its premium valuation. InfoEdge India. InfoEdge is an internet-based service delivery company with both operational and investment portfolios. On the operational side, the company runs recruitment, real estate, matchmaking, and educational platforms, that is Naukri, 99 Acres, Jeevan Sathi, and Shiksha, respectively. On the investment side, InfoEdge strategically invests in tech companies. The stock was trading at a PE of 116 at the time of making this video. The stock has always been expensive. The 10-year median PE for the stock is 108. InfoEdge's business appears to be progressing positively. Recruitment solutions, particularly through Naukri, is a core area of focus for the company, with efforts to expand into global capability centers, GCCs, and non-IT sectors too. The company is acquiring new clients in smaller cities and leveraging strategic products like IIM jobs and Hirist. 99 Acres, the real estate platform, is concentrating on expanding its user base. Jeevan Sathi, the matchmaking platform, has seen its shift to a freemium model, effectively driving top line growth. The focus is now on improving monetization efforts. Shiksha, the education platform, is experiencing steady growth in its domestic business and is profitable. However, the study abroad business faces challenges due to tighter restrictions and reduced job opportunities for international students in some countries. InfoEdge is strategically integrating AI and machine learning across its businesses to enhance user experience, create new features, and improve user engagement. The company is also focusing on the best ways to use its cash reserves to maximize shareholder value. Investors seem to be appreciating these positive developments. Looking ahead, InfoEdge's management has outlined expectations for revenue, growth, and margins across all its business segments. Recently, the board of directors approved allocating up to 1000 crore rupees to the IE Venture Investment Fund 3. This fund focuses on early stage tech driven Indian startups. InfoEdge's expensive PE of 116 reflects the market's confidence in its diversified growth engines and strategic tech investments. However, sustaining this valuation hinges on the management's execution across core segments, the progress on monetization efforts, and the disciplined capital allocation amid global uncertainties. Trent. Trent is a retail company with a presence in fashion from value to luxury products. Trent runs Westside, lifestyle retailing, and Zudio, value retailing. It is primarily in the business of apparel, beauty, and fashion. Trent is also in grocery retailing through a joint venture with Tesco called Trent Hypermarket Private Limited, which operates Star Stores. Due to Trent's association with the Inditex Group, it also operates Zara stores and Massimo Dutti stores in India. Coming to the valuations, at the time of making the video, the stock was quoting at a P/E ratio of 105. Trent's valuation reflects its position as one of India's fastest growing retail companies. Its sales and net profit grew by 36% CAGR and 57% CAGR over the 5-year period. The stock price was also rising continuously, cheering this growth up until October 2024. Trent's 15% 3-year average ROE, return on equity, signals efficient capital deployment by the management. This is a critical factor in sustaining premium valuations in retail. The market is pricing Trent as a high growth compounding stock, banking on Zudio's aggressive store expansion in Tier 2 and Tier 3 cities, as well as Westside's steady premiumization. However, risks like intensifying competition from brands like Reliance Trends, Uniqlo, as well as e-commerce could pressure margins. Scaling up new ventures like beauty and lab-grown diamonds demands upfront investments. The Inditex partnership adds a premium cachet but contributes little to overall growth. Trend's valuation hinges on balancing store additions with unit economics, maintaining Zudio's pricing edge, and integrating acquisitions profitably. While growth could justify the current optimism in the stock, any slippage in same-store sales growth or margins due to overexpansion could trigger a derating for the stock. Max Healthcare Institute. Max Healthcare Institute is a leading healthcare provider in India. It operates a network of hospitals and medical centers, along with home care services called Max at Home and a diagnostic services called Max Lab. Max Healthcare provides comprehensive healthcare services, including diagnostics, lab services, consultations, surgical and non-surgical procedures, as well as medical care. Coming to the valuations, the stock was trading at a PE of 97 at the time of recording. This reflects the market's conviction in its ability to sustain industry-leading growth in India's rapidly expanding healthcare sector. The long-term growth has also been good, driven by a mix of organic expansion, strategic acquisitions, and operational efficiencies. The 5-year profit CAGR has been 780%, with sales CAGR of 26% for the same period. The markets have clearly rewarded this growth. However, the valuation narrative hinges on capacity expansion risks and debt dynamics. Max Healthcare is aggressively adding 750 beds and spending 171 million rupees for acquisitions. The scalability of these new units and the integration of the acquisitions will test the margins of the company. Newer hospitals currently operate at 21% EBITDA margin versus 28.6% for the mature units. The market's optimism assumes that Max can replicate its 5-year net profit CAGR, but the 97p prices in flawless execution. Any delays in ramp ups or margin compression or rising competition could hit the stock hard. Adani Green Energy. Adani Green Energy is India's largest renewable energy producer. It operates utility scale solar, wind, hybrid, and hydro pumped storage projects. The company sells electricity under 25-year PPAs, that is, power purchase agreements, to government entities to ensure stable cash flows. The stock was trading at a PE of 95 at the time of recording. Adani Green Energy's sky high PE embodies a polarized investor sentiment. The bulls argue that the premium is justified due to its dominance in the Indian renewable energy sector. The company's 47% surge in energy sales, industry leading margins, and a 93% contracted portfolio with fixed tariffs point to predictable growth in the future. Additionally, partnerships with Total Energies and its battery storage plans have bolstered confidence in its long term potential. Skeptics, however, caution that the valuation assumes flawless execution of the company's aggressive targets. Its net debt of 57 billion rupees and rising interest costs pose liquidity risks for the company. Regulatory uncertainties such as renewable purchase obligation enforcement and the government's ALMM policy adds to the complexities. The market has started to recognize the stock's vulnerabilities. The short seller report allegations in 2023 and the subsequent SEBI investigation have also added regulatory and reputational risks. So, investors must weigh its premium pricing against these execution risks, corporate governance, and debt. In a sector poised for exponential growth, Adani Green Energy's story is one of high stakes and even higher ambitions. Conclusion. These 5 high PE stocks encapsulate investors' bets on future growth. They reveal how market sentiment, strategic expansion, and economic optimism can all combine to inflate valuations of stocks. However, prudent investing demands a balance between chasing growth and managing risk. Investors should analyze fundamentals of these companies, growth expectations, competitive pressures, and corporate governance when considering stocks with premium valuations. Disciplined research and a long term perspective will guide investors to identify the difference between a visionary investment and an overhyped bubble. Happy investing.